We will discuss important 150 MCQs of financial management. These MCQs are much helpful for various job recruitment exams and important for finance and commerce students. 1. The primary goal of the financial management is A. To maximize the return, B. To minimize the risk, C. To maximize the wealth of owners, D. To maximize profit. Answer is D. 2. In his traditional role, the finance manager is responsible for A. Range of utilization of funds, B. Arrangement of financial resources, C. Acquiring capital assets of the organization, D. Efficient management of capital. Answer is D. 3. Financial management is mainly concerned with A. All aspects of acquiring and utilizing financial resources for firms' activities, B. Arrangement of funds, C. Efficient management of every business, D. Profit maximization. Answer is A. 4. Capital budgeting is related to A. Long-term assets, B. Short-term assets, C. Long-term and short-term assets, D. Fixed assets. Answer is A. 5. Working capital management is managing A. Short-term assets and liabilities, B. Long-term assets, C. Long-term liabilities, D. Only short-term assets. Answer is A. 6. Which few hold the shares of a public limited company? It is called A. Privately owned company, B. Publicly traded company, C. Closely held company, D. Public and private company. Answer is A. 7. Future value interest factor takes A. Compounding rate, B. Discounting rate, C. Inflation rate, D. Deflation rate. Answer is A. 8. Present value takes A. Discounting rate, B. Compounding rate, C. Inflation rate, D. Deflation rate. Answer is A. 9. Financial decisions involve A. Financing cash decisions, B. Investment sales decisions, C. Investment, financing, and dividend decisions, D. Investment dividend decisions. Answer is A. 10. Traditional approach confines finance function only to A. Raising funds, B. Mobilizing, C. Utilizing, D. Financing. Answer is A. 11. The company's cost of capital is called A. Leverage rate, B. Hurdle rate, C. Risk rate, D. Return rate. Answer is A. 12. Market value of the cost of capital is decided by A. The respective companies, B. The investment market, C. The government, D. Shareholders. Answer is D. 13. Cost of retained earnings is equal to A. Cost of equity, B. Cost of debt, C. Cost of bank loan, D. Cost of term loans. Answer is D. 14. Beta measures the A. Investment risk rate, B. Financial risk, C. Market risk, D. Market and finance risk. Answer is A. 15. EBIT is usually the same thing as A. Funds provided by operations, B. Earnings before taxes, C. Net income, D. Operating profit. Answer is D. 16. The company's average cost of capital is A. The average cost of equity preference shares, B. The average cost of equity shares and debentures, C. The average cost of all sources of long-term funds, D. The average cost of short-term funds. Answer is A. 17. The cost of capital of a long-term debt is generally A. Lower than the owned funds, B. Equal to that of owned funds, C. More or less than owned funds, D. Higher than that of owned funds. Answer is D. 18. Interest on debt capital provides A. Added profit to the equity shareholders, B. Tax shield, C. Additional financial burden, D. Dividend. Answer is A. 19. The most difficult to calculate is A. The cost of preferred capital, B. The cost of equity capital, C. The cost of retained earnings, D. The cost of equity and preference capital. Answer is A. 20. Long-term sources are A. Retained earnings, B. Debentures, C. Share capital, D. All of the above. Answer is D. 21. When a company uses increased fixed cost for production, this is an example of what type of leverage? A. Operating leverage, B. Financial leverage, C. Variable cost leverage, D. Combined leverage. Answer is A. 22. When a company uses debt fund in its financial structure, it will lead to a change in A. Financial leverage, B. Operating leverage, C. Money market leverage, D. Stock market leverage. Answer is A. 23. Short-term sources are A. Bank credit, B. Public deposit, C. Commercial papers, D. All of the above. Answer is D. 24. Fixed cost per unit A. Does not change with volume of production, B. Be flexible according to the rate of interest, C. Changes according to volume of production, D. Not remains constant. Answer is A. 25. Variable cost in an organization A. Be fixed according to the rate of growth, B. Changes with the volume of production, C. Does not change with volume of production, D. Remains constant. Answer is A. 26. Variable cost per unit A. Varies with the level of output, B. Remains constant irrespective of the level of output, C. Changes with the growth of the firm, D. Does not change with volume of production. Answer is A. 27. Marketable securities are primarily A. Short-term debt instruments, B. Short-term equity securities, C. Long-term debt instruments, D. Long-term equity securities. Answer is A. 28. The operating leverage measures. A. Business risk. B. Operating risk. C. Financial risk. D. None of the above. Answer is B. 29. Which term means mathematical relationship between two figures? A. Income. B. Expense. C. Ratio. D. Profit. Answer is C. 30. Financial leverage is also known as A. Trading on equity. B. Trading on debt. C. Interest on equity. D. Interest on debt. Answer is A. 31. A firm will have favorable leverage if its earnings are more than A. Debt. B. Interest. C. Equity. D. Debt cost. Answer is D. 32. Operating leverage times financial leverage equals A. Composite leverage. B. Financial composite leverage. C. Operating composite leverage. D. Fixed leverage. Answer is A. 33. Operating leverage equals A. Contribution divided by EBIT B. Contribution divided by EBT C. Contribution divided by total expenses. D. Contribution divided by operating PBT. Answer is A. 34. Cost of capital is what rate of return expected by its investors? A. Minimum. B. Maximum. C. Equal D. Higher. Answer is D. 35. According to the traditional approach, cost of capital affected by A. Debt equity mix. B. Debt capital mix. C. Equity expenses mix. D. Debt interest mix. Answer is D. 36. The formula of EBIT equals A. Sales minus variable cost. B. Contribution minus fixed cost. C. Sales minus fixed cost. D. All the above. Answer is B. 37. Shares having no face value are known as A. No PAR stock. B. At PAR stock. C. Equals stock. D. Debt equity stock. Answer is D. 38. A fixed rate of what is payable on debentures? A. Dividend. B. Commission. C. Interest. D. Brokerage. Answer is D. 39. Effective cost of debentures is what as compared to shares? A. Higher. B. Lower. C. Equal D. Medium. Answer is C. 40. Ownership securities are represented by A. Securities. B. Equities. C. Debt. D. Debentures. Answer is A. 41. Net working capital refers to A. Total assets minus fixed assets. B. Current assets minus current liabilities. C. Current assets minus inventories. D. Current assets. Answer is B. 42. The important task of the finance manager is management of A. Debt. B. Equity. C. Profit. D. Cash. Answer is D. 43. Finance function is one of the most important functions of which management? A. Business. B. Marketing. C. Financial. D. Debt. Answer is C. 44. Nominal rate is the rate compounded A. One time in 2 years. B. Twice in 2 years. C. More than once in a year. D. More than 2 years. Answer is D. 45. The expansion of year is A. Equivalent annual rate. B. Equivalent annuity rate. C. Equally applied rate. D. Equal advance rate. Answer is B. 46. Traditional theorists believe that A. There exists an optimal capital structure. B. No optimal capital structure. C. Equal optimal capital structure. D. 100% debt. Financial organizations. Answer is B. 47. The dividend payout ratio is equal to A. The dividend yield and the capital gains yield. B. Dividends per share divided by earnings per share. C. Dividends per share divided by PAR value per share. D. Dividends per share divided by current price per share. Answer is B. 48. Altering the leverage ratio does not influence the market value of the firm. This is the basic premise of A. Net income approach. B. Traditional approach. C. Modern approach. D. Net operating income approach. Answer is D. 49. Which of the following is an argument for the relevance of dividends? A. Informational content. B. Reduction of uncertainty. C. Some investors' preference for current income. D. All of the above. Answer, D. 50. Retained earning are A. An indication of a company's liquidity. B. The same as cash in the bank. C. Not important when determining dividends. D. The cumulative earnings of the company after dividends. Answer is D. 51. Arbitrage is the level processing technique introduced in A. Net income approach. B. approach. C. Operating approach. D. Traditional approach. Answer is A. 52. In finance, working capital means the same thing as A. Total assets. B. Fixed assets. C. Current assets. D. Current assets minus current liabilities. Answer is C. 53. In proper capital budgeting analysis we evaluate incremental A. Accounting income. B. Cash flow. C. Earnings. D. Operating profit. Answer is B. 54. The probability of bankrupt is higher A. For a levered firm than an unlevered firm. B. For an unlevered firm than an levered firm. C. Only levered firm. D. Only unlevered firm. Answer is C. 55 All of the following influence capital budgeting cash flows except A. Accelerated depreciation, B. Salvage value, C. Tax rate changes, D. Method of project financing used. Answer is D. 56 This type of risk is avoidable through proper diversification. A. Portfolio risk, B. Systematic risk, C. Unsystematic risk, D. Total risk. Answer is A. 57 Capital budgeting decisions in India cannot be reversed due to A. Leaviness of the project, B. Ill-organized market for second-hand capital goods, C. Government regulations, D. Policy of the management. Answer is C. 58 Payback period is superior to other methods if the objective of the investor is to A. Consider cash flow in its entirety, B. Consider the present value of future cash flow, C. Consider the liquidity, D. Consider the inflows in its entirety. Answer is A. 59 If the payback is a bad rule, the average returns on book value is A. Worse, B. Better, C. The best, D. Equal. Answer is C. 60 Net present value is a popular method which falls A. Within non-discount cash flow method, B. Within discount cash flow method, C. Equal within non-discount cash flow method, D. No discount cash flow. Answer is C. 61 A demerit of our method is that it does not distinguish between A. Lending and borrowing, B. Discounting and non-discounting, C. Cash flow and non-cash flow, D. Inflow and outflow. Answer is C. 62 Net working capital is the excess of current asset over A. Current liability, B. Net liability, C. Total payable, D. Total liability. Answer is C. 63 Working capital is also known as A. Circulating, B. Fluctuating capital, C. Fixed, D. Going. Answer is B. 64 The gross working capital is a which measurement concern concept? A. Going, B. Money, C. Revenue concept, D. Cost concept. Answer is B. 65 The rate of return on investment what with the shortage of working capital? A. Falls, B. Going, C. Constant, D. Change. Answer is A. 66 Greater the size of a business unit dash will be the requirements of working capital? A. Larger, B. Lower, C. No change, D. Fixed. Answer is B. 67 The fixed proportion of working capital should be generally financed from the which capital sources? A. Fixed, B. Variable, C. Semi-variable, D. Borrowed. Answer is D. 68 The volume of sales is influenced by which policy of a firm? A. Finance policy, B. Credit policy, C. Profit policy, D. Fund policy. Answer is D. 69 Factoring is a form of financing? A. Payable, B. Receivable, C. Borrowings, D. Debts. Answer is C. 70 The decision function of financial management can be broken down into the which decisions? A. Financing and investment, B. Investment, financing, and asset management, C. Financing and dividend, D. Capital budgeting, cash management, and credit management. Answer is B. 71 The time required to process and execute an order is called? A. Allowed time, B. Lead time, C. Accepted time, D. Fixed time. Answer is D. 72 The focal point of financial management in a firm is? A. The number and types of products or services provided by the firm, B. The minimization of the amount of taxes paid by the firm, C. The creation of value for shareholders, D. The dollars profits earned by the firm. Answer is C. 73 The policy concerning quarters of profit to be distributed as dividend is termed as? A. Profit policy, B. Dividend policy, C. Credit policy, D. Reserving policy. Answer is C. 74 The market price of a share of common stock is determined by? A. The board of directors of the firm, B. The stock exchange on which the stock is listed, C. The president of the company, D. Individuals buying and selling the stock. Answer is D. 75 The long-run objective of financial management is to? A. Maximize earnings per share, B. Maximize the value of the firm's common stock, C. Maximize return on investment, D. Maximize market share. Answer is B. 76 A company having easy access to the capital markets can follow a which dividend policy? A. Liberal, B. Formal, C. Varying, D. Strict. Answer is D. 77 Which dividend promises to pay shareholders at future date? A. Scrip, B. Cash, C. Stock, D. Property. Answer is B. 78 Which is concerned with the maximization of a firm's stock price? A. Shareholder wealth maximization, B. Profit maximization, C. Stakeholder welfare maximization, D. EPS maximization. Answer is C. 79 According to the which model, the dividend decision is irrelevant? A. MMB Garden, C. Walter, D. XY. Answer is D. 80 The cash management refers to management of? A. Cash only, B. Cash and bank balances, C. Cash and near cash assets, D. Fixed assets. Answer is B. 81 Miller-Orr Model is suitable in those circumstances when A. Demand for cash is steady. B. Demand for cash is not steady. C. Carry cost and transaction cost are to be kept at minimum. D. Demand for cash is variable. Answer is A. 82 Offering cash discount to customers. Result is A. Reducing the average collection period. B. Increasing the average collection period. C. Increasing sales. D. Decreasing sales. Answer is D. 83 A higher accounts receivable turnover ratio means A. Lower debt collection period. B. Higher debt collection period. C. Lower sales. D. Higher sales. Answer is B. 84 Good inventory management is good. A. Financial. B. Marketing. C. Stock. D. Purchasing management. Answer is D. 85 Setup cost is a type of cost. A. Fixed. B. Variable. C. Semi-variable. D. Carrying. Answer is D. 86 Reorder level is what then safety cash level? A. Higher. B. Lower. C. Medium. D. Fixed. Answer is D. 87 approach assumes that which markets are perfect? A. Receivable. B. Capital. C. Stock. D. Exchange. Answer is D. 88 The amount of the temporary working capital? A. Keeps on fluctuating from time to time. B. Remains constant for all times. C. Financed through long-term services. D. Financed short-term sources. Answer is C. 89 To whom does the treasurer most likely report? A. Chief Financial Officer. B. Vice President of Operations. C. Chief Executive Officer. D. Board of Directors. Answer is A. 90 The return after the payoff period is not considered in case of A. Payback period method. B. Interest rate method. C. Present value method. D. Discounted cash flow method. Answer is C. 91 Depreciation is included in costs in case of A. Payback method. B. Accounting rate. C. Discounted cash flow. D. Present value method. Answer is A. 92 What is the most appropriate goal of the firm? A. Shareholder wealth maximization. B. Profit maximization. C. Stakeholder maximization. D. EPS maximization. Answer is A. 93 What is concerned with the maximization of a firm's earnings after taxes? A. Shareholder wealth maximization. B. Profit maximization. C. Stakeholder maximization. D. EPS maximization. Answer is B. 94 Which management is concerned with the acquisition, financing, and management of assets with some overall goal in mind? A. Financial management. B. Profit maximization. C. Agency theory. D. Social responsibility. Answer is A. 95 The bonus issue is permitted to be made out of dash and premium collected in cash. A. Free reserves. B. Free interest. C. Free bonus. D. Free cash dividend. Answer is A. 96 The bonus issue is made to make the nominal value and the dash value of the shares of the company. A. Face. B. Market. C. Stock. D. Real. Answer is B. 97 Premium received in cash is a source of which issue? A. Right. B. Bonus. C. Cash. D. Resumes. Answer is C. 98 Having defined working capital as current assets, it can be further classified according to A. Financing method and time. B. Rate of return and financing method. C. Time and rate of return. D. Components and time. Answer is B. 99 Dividend policy of a firm affects both the long-time financing and which wealth? A. Owners. B. Creditors. C. Debtor. D. Shareholders. Answer is C. 100 Which is the distribution of the profits of a company among its shareholders? A. Shares. B. Interest. C. Dividend. D. Commission. Answer is C. 101 The amount of current assets that varies with seasonal requirements is referred to as which working capital? A. Permanent. B. Net. C. Temporary. D. Gross. Answer is C. 102 Excess working capital results in A. Block of cash. B. Losing interest. C. Lack of production. D. Lack of smooth flow of production. Answer is A. 103 The market value of the firm is the result of A. Dividend decisions. B. Working capital decisions. C. Capital budgeting decisions. D. Trade-off between cost and risk. Answer is D. 104 Insufficient working capital results in A. Block of cash. B. Losing interest. C. Lack of production. D. Lack of smooth flow of production. Answer is D. 105 Effective cost of debentures is what as compared to shares? A. Higher. B. Lower. C. Equal. D. Medium. Answer is C. 106 Cost of capital is at what rate of return expected by the investor? A. Minimum. B. Maximum. C. Average. D. Marginal. Answer is B. 107. Which decision relates to the determination of total amount of assets to be held in the firm? A. Financing. B. Investment. C. Dividend. D. Controlling. Answer is D. 108. Which of the following is a function of the finance manager? A. Mobilizing funds. B. Risk returns trade-off. C. Deployment of funds. D. Control over the uses of funds. Answer is D. 109. Which of the following techniques of project appraisal does not consider the time value of money? A. Benefit cost ratio. B. Net present value. C. Internal rate of return. D. Annual capital charge. Answer is C. 110. Under trading means. A. Having low amount of working capital. B. High turnover of working capital. C. Sales are less compared to assets employed. D. Low turnover of working capital. Answer is D. 111. Financial risk arises due to the A. Variability of returns due to fluctuations in the securities market. B. Changes in prevailing interest rates in the market. C. Leverage used by the company. D. Liquidity of the assets of the company. Answer is D. 112. The risk that arises due to change in the purchasing power is called A. Financial risk. B. Interest rate risk. C. Business risk. D. Inflation risk. Answer is D. 113. The factors which affect profit and earning ratio are A. Growth rate. B. Debt proportion. C. Retention ratio. D. All of the above. Answer is D. 114. Long-term solvency is indicated by A. Liquidity ratio. B. Debt equity ratio. C. Return coverage ratio. D. Both A and B. Answer is B. 115. Which of the following is the problem encountered in financial statement analysis? A. Development of benchmarks. B. Window dressing. C. Interpretation of results. D. All of the above. Answer is D. 116. Earnings per share, EPS, is equal to A. Profit before tax divided by no of outstanding shares. B. Profit after tax divided by no of outstanding shares. C. Profit after tax divided by amount of equity share capital. D. Profit after tax less equity dividends divided by no of outstanding shares. Answer is B. 117. Degree of total leverage can be applied in measuring change in A. EBIT to a percentage change in quantity. B. EPS to a percentage change in EBIT. C. EPS to a percentage change in quantity. D. Quantity to a percentage change in EBIT. Answer is C. 118. The measure of business risk is A. Operating leverage. B. Financial leverage. C. Total leverage. D. Working capital leverage. Answer is A. 119. The value of EBIT at which EPS is equal to 0 is known as A. Break-even point. B. Financial break-even point. C. Operating break-even point. D. Overall break-even point. Answer is B. 120. Degree of financial leverage is a measure of relationship between A. EPS and EBIT. B. EBIT and quantity produced. C. EPS and quantity produced. D. EPS and sales. Answer is A. 121. Operating leverage examines A. The effect of the change in the quantity on EBIT. B. The effect of the change in EBIT on the EPS of the company. C. The effect of the change in output to the EPS of the company. D. The effect of change in EPS on the output of the company. Answer is A. 122. Which of the following is the expression for operating leverage? A. Contribution divided by EBIT. B. EBT divided by contribution. C. Contribution divided by E. D. Contribution divided by quantity. Answer is A. 123. Operating leverage is the response of changes in A. EBIT to the changes in sales. B. EPS to the changes in EBIT. C. Production to the changes in sales. D. None of the above. Answer is A. 124. Walter's model on dividend policy assumes that A. The firm offers an increasing amount of dividend per share at a given level of price per share. B. The firm has a finite life. C. The cost of capital of the firm is variable. D. Equal to current assets plus current liabilities including bank borrowings. Answer is D. 125. The use of preference share capital as against debt finance. A. Reduces DFL. B. Increases DFL. C. Increases financial risk. D. Both A and B. Answer is B. 126. The degree of financial leverage, DFL. A. Measures financial risk of the firm. B. Is 0 at financial break-even point. C. Increases as EBIT increases. D. Both A and B. Answer is A. 127 Dividend changes are perceived important than the absolute level of dividends because A. Management change dividends to protect their seats. B. Dividend changes have signal value for future. C. State that absolute level of dividends is irrelevant. D. Changes determine the level of borrowing. Answer is C. 128 Which of the following is the assumption of the model on dividend policy? A. The firm is an all-equity firm. B. The investments of the firm are financed solely by retained earnings. C. The firm has an infinite life. D. None of the above. Answer is C. 129 Which one of the following is not a source of long-term finance? A. Equity capital. B. Preference capital. C. Commercial paper. D. Term loan. Answer is D. 130 Which of the following methods does a firm resort to avoid dividend payments? A. Share splitting. B. Declaring bonus shares. C. Rights issue. D. New issue. Answer is B. 131 Which of the following characteristics are true, with reference to preference capital? A. Preference dividend is tax deductible. B. The claim of preference shareholders is prior to the claim of equity shareholders. C. Preference shareholders are not the owners of the concern. D. All of the above. Answer is D. 132 What are the factors which make debentures attractive to investors? A. They enjoy a high order of priority in the event of liquidation. B. Stable rate of return. C. No risk. D. All of the above. Answer is D. 133 The method of raising equity capital from existing members by offering securities on pro rata basis is referred to as A. Public issue. B. Bonus issue. C. Private placement. D. Bought out deal. Answer is B. 134 Which of the following is not a source of long-term finance? A. Equity shares. B. Preference shares. C. Commercial papers. D. Reserves and surplus. Answer is D. 135 EBIT means A. Operating income. B. Operating profit. C. Earnings before interest and tax. D. All of the above. Answer is D. 136 Which of the following factors influence S. The capital structure of a business entity? A. Bargaining power with the suppliers. B. Demand for the product of the company. C. Technology adopted. D. Adequate of the assets to meet any sudden spurt in demand. Answer is C. 137 Which of the following ratios is not affected by the financial structure and the tax rate of a company? A. Net profit margin. B. Earning power. C. Earnings per share. D. Capitalization rate. Answer is C. 138 A company may raise capital from the primary market through A. Public issue. B. Rights issue. C. Bought out deals. D. All of the above. Answer is D. 139 Under which of the following approaches cost of equity capital is assumed to be constant with the change in leverage? A. Net income approach. B. Modigliani and Miller approach. C. Net operating income approach. D. Traditional approach. Answer is A. 140 Which of the following approaches advocates that the costs of equity capital and debt capital remain unaltered when the degree of leverage varies? A. Net income approach. B. Traditional approach. C. Modigliani-Miller approach. D. Net operating income. Answer is A. 141 Cost of retained earnings is equal to A. Cost of equity to be issued. B. Cost of internal equity. C. Rate of dividend expected to be declared. D. Present rate of dividend declared. Answer is B. 142 While calculating weighted average cost of capital, A. Preference shares are given more weightage. B. Cost of issue is considered. C. Tax factor is ignored. D. Risk factor is ignored. Answer is B. 143 Cost of equity capital, A. is lesser than the cost of debt capital. B. is equal to the dividend rate expectations of equity shareholders for the coming year. C. is equal to the dividend rate declared on equity shares. D. is equal to the return earned on equity capital. Answer is C. 144 Which, among the following, are common misconceptions about cost of capital? A. Depreciation generated funds have no cost. B. Cost of capital is low if a project is heavily debt financed. C. Cost of equity is equal to the dividend rate. D. All of the above. Answer is D. 145 Which of the following is not a feature of an optimal capital structure? A. Safety. B. Solvency. C. Control. D. Flexibility. Answer is D. 146 The overall capitalization rate and the cost of debt remain constant for all degrees of leverage. This is pronounced by A. Traditional approach. B. Net operating income approach. C. Net income approach. D. approach. Answer is C. 147. While calculating weighted average cost of capital, A. Retained earnings are excluded. B. Cost of issues are included. C. Weights are based on market value or on book value. D. Equity shares are given more weights. Answer is D. 148. Which of the following is not an assumption in the Miller-Orr Model approach? A. There are no transaction costs. B. Securities are infinitely divisible. C. Investors have homogeneous expectations. D. All the firms pay tax on their income at the same rate. Answer is D. 149. Which of the following is not an assumption in Miller-Orr Model approach? A. There are no corporate or personal income tax. B. Investors are assumed to be rational and behave accordingly. C. There is no corporate tax though there are personal income tax. D. Capital markets are perfect. Answer is D. 150. Which of the following is assumption behind the realized yield approach? A. The yield earned by investors has been, on average, in conformity with their expectations. B. The dividends will continue growing at a constant rate forever. C. The market price will continue growing at a constant rate forever. D. Both A and B. Answer is D. Best of luck for your exams. Consider to subscribe, if you are new here.